The following is a presentation of TFNN.
Good afternoon, folks. Welcome to our April 25th edition of our live webcast. And we have a tremendous amount to cover today, so let's get right to it. I'm going to switch over to the charts here. We'll be switching back and forth. Right now, the Dow's up 89 points, S&P's up 18, the Composite's up 66 points right now. And this is the chart that I had focused on in this morning's newsletter. And looking at the ES Mini to be able to give us our signal to take a short position in the markets. We're going to take a look at a number of different things. The first signal that we potentially received was right here. This was at 2 p.m. This afternoon. Again, this is a 30-minute chart that we're looking at. If you look in the upper left-hand corner, hopefully you're able to see the time frame that we're on. This shows you the actual instrument, shows the ES Mini 30-minute. And the green area here may be a little bit more difficult for you to see, is telling you the time, the close, the high, the low, the open of whatever session, as well as the volume that's going on. And as I place my cursor, the crosshair over it, it tells you that right now we're in the 3 o'clock session here. And what we were looking at was this was a bearish engulfing. So this was the first. You can see the ES Mini made the 1 to 1.618 as we anticipated this morning. Made that with a wide-ranging bar. Did that coming into the 10 o'clock time frame. And once that was done, the question is the move going to continue higher? And what we're looking for, just as we did at the bottom, what we're looking for is a bearish type candle, either a shooting star preferred or a bearish engulfing, either one preferably. There are some other, certainly there are some other bearish type candles. This one right here is referred to as a dark cloud cover candle, but we're looking more for a bearish engulfing or a shooting star. We did get our first, and you just need to be patient. They don't always present themselves, but most of the time they will, and they'll usually do it around the pattern completion, whether it's an AB equals CD pattern or a retracement, Gartley butterfly, some type of retracement pattern. And the first one that actually came in, as I said, was at 2 p.m. today, was that the market was not finished here, or at least we did not get the reversal candle pattern, at least to be able to take a short-term trade. So that's where we're at right now, really waiting to watch the market unfold. If this area here of 1385 gets taken out, where the market will move to is likely the 1 to 2 A to B equals C to D, which would take it up to the 1391. I believe I covered that in the newsletter as well this morning. That 1391 also is going to turn into a butterfly pattern. A butterfly is an expansion of swing points, and the swing point that we'd be looking at is right up here at 11 o'clock at 1383 point, all the way down to the low of this hammer that was put in right here. This hammer was put in at 10:30 on the 23rd. And what we'll see is where we have two patterns that really come together. So you'll see this 1.272 at 1391. Again, that is the expansion of these two swing points. That's the 1.272 expansion of those swing points. Also happens to be a 1 to 2 A to B equals C to D. And what I mean by that, if you take the measured move from this A point to this B point, and you took that dollar amount, 1523, which shows up here, and you multiply that times 2, which would be $30.50. You can add $30.50 to this low here, 1361, and that would take you right up here to the 1391 area. That's assuming this 1385 gets taken out, and at this stage I don't see a reason for it to not be taken out. You know, the problem here is that it's very easy to trade the ES Mini because it's trading, in essence, around the clock, whereas on the ETFs or that we trade, they're not. And so you can, from a timing standpoint, you prefer to have these reversals take place intraday. What we did also have intraday that I was looking at in case we did not get the reversal candles up in this area here was I was taking a look at this hammer candle that was put in this morning at 9 a.m. This right here, this was after a slight move down. You had a hammer candle that was put in, and then what you also had was you had confirmation. And what I mean by confirmation is when you have a bullish candle, you're looking for a close in the next session, a higher close than the prior session. Preferably in this case, when you're trading the hammer, you'd love to be able to see a close above the actual candle session. That's exactly what you got coming into the 9:30 time frame. So it was absolutely no surprise that the market moved up into the 1.618 area. I'm going to go ahead and remove this non-confirmation and this bearish engulfing, so that as we come back to, we don't have that clutter. I'll also just simply go ahead and remove. Whoops. Let me just remove those, and then we're going to go back over to the presentation. So just wanted to let you know where we were at in the as far as looking at the trades and in the market, and I'll just simply continue to watch this. I'll actually be watching the ES Mini on another screen while we are going through today's presentation. Our next presentation is going to be 2 weeks from today. That's May 9th. Wednesday at 3 p.m. The areas that I did want to go ahead and cover today, I wanted to take a look at the current week's lunar and astrological cycles. Question mark, is this going to mark a market high or a market low? We'll go take a look at that. I wanted to also briefly take a look at the candlesticks and a quick review of that. Take a look at the swing points as well as the A to B equals C to D. We did the ES Mini update here early on. I had a request from one of the subscribers to take a look at the 3 drives to a top or 3 drives to a bottom pattern. So that'll be a focus of today's webcast, as well as what we should be looking for coming into Monday. My concern about the New York Stock Exchange and what we'll be looking at there, as well as gone back, and I've done this before, but I certainly wanted to do that, which was go back and take a look at the Dow chart going back to 1928 and the 50-day, 200-day exponential moving average, especially for those of you that would be taking a look at managing some of your retirement funds where it's non-self-directed. So I'm really speaking about non-self-directed, where you're relying upon an administrator and you only have the opportunity to be in the market or out of the market in cash. So we'll quickly do that, and then questions and answers as well. So a lot to get through, and I'll try to, if you have questions, type them in, I suppose, as we go along, if it's about a specific subject that I'm talking about. So what we did have come in on Saturday was a new moon. So Saturday, 7:20 ephemeris time was actually 2:20 in the morning East Coast time. We had the new moon that came in. We also then on Sunday had, on May 6th, on Sunday, May 8th, we had apogee. I think I've got this messed up. Apologize. We had the apogee. I'm going to switch down here to a different chart. I've got them reversed. There we go. How about that? No, it's the full moon. Thought I had this all set. On the 22nd, so on Sunday, we had apogee come in. That was at 9:48 in the morning, so that was our second, lunar phase. These are important lunar phases for us to pay attention to. And then, as I flip back here, then what we also had coming in on Monday was a 3 planetary index day, P index date. So we had back to back to back. It is not often that you have a significant cluster of lunar and astrological events taking place at once. So when you do, they have meaning, and usually it is some significant meaning. And typically within a day or so, it's marking a top or a bottom. Not necessarily long term, but certainly an intermediate term top or a bottom. So we had those 3 phases coming into the market. And so if we do take a look, this was the chart that I created maybe about an hour ago or so. And as we were, so what I've got identified here, this is Monday's candle. So again, on Monday, Saturday we had a new moon. Monday we had apogee. Monday we had, Saturday, Sunday, Monday, we had the 3 planetary index date. And until the high was taken out, the question is, was this a high or was this a low? And, until the high was taken out today, today's session is not over. So there is 45 minutes or so left in the trading session. But at this stage, with the highs being taken out, it should give us pause to say maybe this marked a bottom until the next set of either lunar or planetary index days comes into being. What we also have here, as we take a look at candle patterns on the chart, we also have a set of bullish candle patterns, that being this 3-day time period here, which set up a morning star set of candles. Here's where you have a large downdraft, where you have a little bit lower low in a small body, and then you have a large candle to the upside. In this case here, not only did you have a 3-day configuration, which was the morning star, this candle was also a bullish engulfing candle, and it engulfed 2 trading sessions, making it relatively strong. So we can see how that also has acted as support. Even as the market moved down on Monday, this area here still acted as a support area as you would have expected it. With today's move, yesterday's move really didn't give us much information, but certainly today's move up to this point in time has. And so we want to. I just simply want to make sure that we do notate a powerful configuration of lunar and celestial aspects. If we just simply take a look at the uptrend channel, the trend line, and swing point analysis, when we're taking a look at a daily chart of the S&P 500, the actual index, what you will see here first is across the top, which you've gotten comfortable with, I would assume, inside the newsletter, is I'm identifying the May 2nd swing point. And the market has been fiddling around with either the top or the bottom of that swing point, either the 1358.59 or the 1370.5 area. And it has not been able to bust through 1358.59. It got down and it tested it, actually closed on it in this trading session right in here. But it still has not closed below that area, so we can see that that is acting as a strong resistance area. What we can also see is I've drawn both a channel that the price is moving within. Those are the black lines. This is the uptrend channel. And as well, I have drawn just simply a trend line. And that trend line coming from the lows put in October, so the October 4th low. And when you're drawing trend lines, when you're using trend lines, I use the very bottom of the candle. In the webcast from 2 weeks ago, if you haven't heard that, please go to the archives. There's about 20 hours worth of archived information, such as today's trading session. The last webcast, I covered channels, primary trading ranges. In this case here, when you are trying to create channels, you're looking for 3 to 4 or more co-located opens or closes. Here's one. That's, again, the black line are the channel lines. So you have 1 or 2 right here for these 2 trading sessions. These 2 trading sessions would mark the 4, and you have many, many, many across the top here. The trend line going from the bottom of the candle to the bottom of this candle, which all of a sudden also acted as a support area as the market tried to move down here during this trading session. And what you can see is on Monday, we did have a piercing of that area. Today, the market is back up above that area for the time being, for right now, until we see otherwise. So, again, from a daily chart standpoint, what we are seeing is certainly a lot of thrashing around. As I pointed out in this morning's newsletter, this rectangle area here has been nothing more than just a roller coaster of upward down, and has provided no way to get into any longer-term or intermediate-term trades that I've been able to find. Plenty of shorter-term trades, and taking a look at the S&P futures contract, just simply because of the pattern changes that go on there. When we take a look at the 3 planetary index date, for those of you that are new to that concept, what I've done, what's included in the newsletter each day, just simply since the study is done, is I've gone back and taken a look at 300 years worth of data. The original P-index dates were developed by Larry Pesavento, Bryce Gilmore, and I believe Dr. Ruth Miller, perhaps a couple of others, and that's really referring to this ET, which stands for ephemeris time, and this is the original work that is done. And when you have and we grabbed this information from an ephemeris, I'll show you that in a moment, but when you have 3 or less or 14 or more planets line up on one day. That's typically an anomaly. You can see 3 here of the entire group that we're looking at, 14 or more or 3 or less. The 3 planetary index dates happen more often than any of the others in the highlighted area, but they still tend to have been an anomaly. That is what occurred on Monday. I'm not going to go into we've got plenty of archived information that reviews all this stuff, so I don't want to, since there's so much to cover today, and I want to make sure that we do have time for questions and answers, I won't continue to go into that. But needless to say, we did have a strong planetary index day coming on Monday with those 2 lunar cycles over the weekend. I think that the low that was put in on Monday is very important. When that low gets taken out, that also would be of significance to us as well. So you want to mark that on any of the charts that you trade and notate. With regard to, this is what is included in each of the newsletters, just simply so you know what is going on during the month. And with this over on the left-hand side here, this tells you what it is that we're looking for as far as number of planetary alignments for each of ET News, referring to this, ET Old right here. Eastern Standard Time is what EST stands for, and so forth. So there is another, this is May. Son of a gun. I got the May in there, so I messed up again. That's 2 in a row. Let me go back here. Here is for the month of April. I apologize for that. Here is the month of April, and again, what we did have come in was a planetary, three planetary index day came in on Monday. Coming up this weekend. So, there is a possibility, and I'd say right now leaning towards more of a possibility, that the low that was put in on Monday, and if today's market closes above Monday's high, that what we're looking at is the market moving up into Friday or Monday, because on Saturday of this week we have another 3 planetary index date that comes in. I believe that this past Monday's was stronger simply because you have the lunar cycles to go along with it and just simply acts as more power. But at this stage right now, it would not surprise me to see the market move up into the weekend. We're already almost through Wednesday. That would leave 2 to 3 more days, because this could take place with the planetary index day taking place on Saturday. The higher low could come in on Friday or on Monday. Let me see here. So I've been through that, caught that. This. Okay. So the question is, I assume you're going to ask that question, especially since I was on that chart. Well, what comes after that, Steve? Well, what comes after that is the May information. I'll include this beginning on Tuesday, but since I wanted you to have that as far as in today's webcast. So what we have on our horizon for the month of May becomes May 18th. And on May 18th, we have a 2 planetary index day. Now, so logically, if I take a look at this, because we have seen institutional selling in the market, and so I can logically say, if we just take a look at planetary and lunar aspects as they are occurring, that what was put in on Monday was a low. It'll move up into either Friday or Monday, whereas we'll see the market start to sell off and move down into the 18th of May when we hit a very strong 2P index date. And when I say very strong, I'm going to switch back here to this slide, and we're going to take a look real quickly here at the ephemeris time original P index dates. That's this on the left-hand side. And so what I want to, let me just make sure, 1 second here. I want to do 2 things here, because this shows both the ephemeris time new aspects and ephemeris time old aspects. And when the original work was done here in the old aspects, there were 4 planets that were not included, things like Ceres and Pallas, and so the as information gets added to the ephemeris, it was more difficult. It is more difficult now to make a 2 planetary index date versus when the original work was done many years ago. So I wanted to point that out to you. So as we come and we take a look at ephemeris time, which is this column here, if we take a look at ephemeris time with new aspects, which occurs, you're going to see that in 300 years, that is 109 plus thousand days, this event occurs only 67 times. It doesn't always have to be a market event, but it can be some other type of event that might go on in the world. But when you have something like that type of planetary shift with only two showing up, although I can't guarantee that there will be a set of fireworks or market turns, I think that that we can hold on to our hats come the May 18th time frame. We're talking 0.06% of the time, 67 times out of 109,000 days. Even based on the original work, you were looking at 497,000. Again, there were fewer planets in here, but so I do mark coming into May as being significant, and you'll want to go ahead and mark that on your calendar now, I suspect. So when we take a look at what else is going on during that time period, again, the date that we're looking at is May 18th. Well, what we also have occurring is we have on May 19th apogee, so where the moon is furthest from the Earth, and that is Saturday. So then we also have on the 20th a new moon and a solar eclipse. So this whole combination of activity that's going on the 18th, 19th, and 20th, if history is an identifier of just bottom line, is that this should be a very significant place in the market. Market could easily move up into that time frame or move down, but whatever which way the market is moving into that time frame, we will certainly need to be on guard for a change in direction. All of this information, folks, can be obtained on your own if you would like, and what you would do is you would need to get hold of an ephemeris. At the bottom of the ephemeris is this daily aspectarian. When I speak of 2 or 3 or 16 dates, how many ever occur, again, in the information that's contained that makes up this entire set of tables here, all that is really coming from this information, excuse me, and you can see everything. All I really need to do is count the number of planetary alignments on each day. So this would have been Monday the 1st, Tuesday the 2nd, Wednesday the 3rd, and so forth. This is not for the month of April or May. This is from some time in the past. If you'd like a copy of the ephemeris, what you would do is call Starcraft Publishing at this number here. You don't get anything for sending you over to these folks. What you want to make sure that you ask for is the New American Ephemeris 2007-2020. Make sure specifically you ask for the New American Ephemeris 2007-2020, and maybe also state you want to make sure you get the one that has the daily aspectarian on it, and it would be on the bottom. When we take a look at the next cycles also that are coming in, you've got on the 6th of May, you have a full moon that is coming in. The next, and I guess I had my slides out of whack. If I go back up to the beginning, the next, here we go. I did that again. How about, so I guess I did. Okay, here we go. So on May 6th on Sunday, what we also have is perigee. So I believe that is next Sunday, not this Sunday, when we'll have the perigee phase as well as the full moon coming in on that day. So that also that we may see continued choppiness, for a while in these markets and a lot of volatility. With regard to candles, I refer to candles. I use candles often I use candles all the time, quite frankly. And I'm watching the markets on the 30-minute, and we do not have any kind of bearish engulfing candle that has formed itself. When we're taking a look at candles, this is the body of the candle. This case here, the black actually in my charts would represent red, where the market would close lower. So on my candles, when you see a red candle, the top of the session is the open, the bottom of the body is the close, and the wicks, or the shadows as it's called, are the high and low of that session, any time frame that is used. In my case here, the white body would be a green body, and this would indicate the open, the close, the high, and the low of the session. The candles that we are looking for when we're trying to make turns as we are completing a D point, as we are completing an A to B equals CD pattern, what we're looking for on the bullish side is we're looking for this hammer candle, or we are looking for this bullish engulfing candle. These are other bullish candles that are out there. I referred to the Morning Star as we took a look at the S&P 500. So I do pay attention to this candle confirmation as well. This is a strong one because it is a three-candle pattern that is out there, and so it's not so easy to make, but clearly you can see where the bears had control. There was a pause, and then boom, the bulls took back over, and the close below the low of that session would indicate that the market wants to continue moving down, because that would be a bullish candle. So you're primarily looking for hammers and bullish engulfings. If you just learn those two candles alone in your trading, you will be able to make some excellent trading decisions in any of the equities that you're in. Likewise, on the bearish side, what I want you to focus on is a shooting star, which is, in essence, is an inverted hammer candle, and I want you to focus on the bearish engulfing, the exact opposite. There is the evening star, which is the opposite of the Three Rivers Morning Star. They call this the evening star. It's a three-candle formation. It actually goes back to the 16th century. All of these candles come from Japanese candlestick charting when they use this to track rice. They call this a three-river candle just simply because land was what was at stake and was being protected back in the 16th century. And the idea, the reason why they call it a river is they typically had the land was divided by a river. The folks trying to take the land away from those who owned it tried to cross the river. They were able to push them back, and that became an area, a strong area of support, if you will. So that's a little bit of got a little off track there. Probably shouldn't have. I have done, and you'd have to go back several weeks worth of webcast, but I did a webcast and spent quite a bit of time taking a look at the four different types of candles on the hammer that are out there. And so I recommend that you go back through the archives. I leave this here up on the screen for a moment. I don't want to read through every element, but this will help you to understand. This is, and if I go from left to right, as far as types of candles that you're looking for, this one here would be number 1, number 2, number 3, and number 4 as far as strength. They are all good candles. This just is a higher quality candle. This is the second highest quality, and so on. As we take a look at, and in order for a hammer candle to occur, you're going to have a small body, and the wick needs to be at least 2 times the size of the body. So if you see a long body, chances are you are not going to have a hammer candle. And a hammer's or a shooting star, which would be inverted, which would be flipped around, would lost my train of thought there. So I'll just we'll just move on. It was because I was looking at the chart to see what was going on with the last session. So the last session that just ended, the last 30-minute session that just ended just moments ago, really did not give us any type of bearish candle. So the next possibility looks like that really has it is a bearish candle. It's just simply not a bearish engulfing candle that occurred going into the 3:30 session. We may not get any type of confirmation to certainly take a short position, meaning that the market would breathe and just pull down from here. So we don't have that at this moment. We're going to talk about A, B equals CD patterns, and what I did want to tell you, I have communicated this before. The market is always making A to B equals CD patterns in almost anything that you trade, and on any time frame that you trade. And an A to B equals C to D. There are different ABC patterns than the ones that are referred to in Tom's book, and these are. When you're taking a look at Tom's book and what he's talking about there, he's looking at trying to teach you how to get in on a pullback in the B to C leg. I'm not teaching you that at all. I'm teaching you to either buy or sell the D points. That way, I want to teach you always to be the expert on the C to D leg. To me, that's an easier trade, and the more comfortable you get with the D point and waiting for a candle confirmation, to occur, either bearish or bullish, depending on which way the market is going, and then waiting for a confirmation to occur. After that will be a trade setup that will work very well for you for forever, quite frankly. And so 40% of the time, A to B equals C to D is going to exceed the 1-to-1. So that means 60% of the time you're looking at a 1-to-1 candle, and understanding that C to D leg will help you to understand whether that's going to be a 1.272 or 1.618, just as when we kicked off the webcast today. Here is an example of the diamonds in the morning, because the newsletter is coming out at 7:30-ish. Usually the best patterns to take a look at with regard to giving us a clue as to which way the markets are going are the futures markets, the ES Mini, and so that is why oftentimes that is featured. Even if you don't trade the ES Mini, which the majority of you don't, it still is an excellent tool to help us understand where the markets will be moving to, and can, for those of you that do trade intraday, you certainly need to be aware of that, and you can use those candle formations to help you or patterns, AB equals CD patterns, to get in or out of the trade and manage it. But what I did want to do is I did want to just go ahead and pull the diamonds up. This is the 30-minute chart, and all I did was just grab, this is current as of, maybe an hour ago at most, and I can pull it up. And all I did, just so I can show you that these are patterns are occurring on a continuous, ongoing basis, is just simply took a look at the last three sets of A to B equals CD patterns, on the way up, on the way down, on the way up. In this case here, as we're taking a look at, here's your A point, here's your B point, and we're taking a look at swing points. And when we're taking a look for swing points, what we're trying to do here, folks, and the reason why I want to teach you to become the expert of the D point, the C to D leg, is because A to B and the B to C have already formed. So you don't have to use any kind of subjectivity whatsoever to create your AB equals CD pattern. And certainly as this A pattern here was forming, and this was a major reversal. I'm looking for what I call major intersections, major changes in price trends. And in this case here, somebody might say, well, I can see that as the A point. Perhaps this is the B point, and it could have been, but there was really no retracement here. This is basically minimal retracement, and in this case here, this high is higher than this candle right here, so you wouldn't draw it from here to this spot. You're always looking to draw it to higher areas, and you're just simply waiting for the patterns to unfold. This clearly here, to me, here was your A point. If you were patient, you got to your B point, the market pulled back and went on and completed the C to D leg. Now, 131.40 was the actual price projection. What this got up to was about 130.75 or something, like 130, maybe got up to 131. I think it did, 131.05, so it missed it by 25 cents or something like that on a $131 stock. So you're looking, it does not need to hit the spot exactly. What you are looking for is a candle pattern that's going to indicate the reversal. Again, just like we're looking for today, either a bearish engulfing candle or a shooting star. In the case of the diamonds, what you have right here, this red candle at the D point or close to the D point, what you did have was a bearish engulfing candle. So if you go to your diamonds 30-minute chart and you take a look at the close here coming into the 17th, you'll see that it engulfed the prior 30-minute session, the 3 to 3:30 session. There was your first clue, the identifier that we were looking for, that the A to B equals C to D, that the D point was complete. You had your confirmation on the open on the following trading session when you gapped down. You're always looking for a close below a bearish engulfing candle, the very next candle, to confirm that price is moving in your direction, and you absolutely received that on this next candle when it gapped down. The question is, okay, do you wait for it to pull back, try to close the gap? Do you get right in and chase it? And what you have to use there is money management, and you just simply should, consider using a position size calculator or doing your own manual calculations. You can certainly manually calculate the high of open to close from the prior 10 trading sessions to give you an idea of what the average true trading range is for those 10 candles. And then if you multiply that amount by 1.618, that will help you to identify where your stop ought to be. But I can tell you your stop in this case here would have been a close above the bearish engulfing candle right here. And as you can see here, you make an A to B. It moves back up here. C to D, projected at 128.22. You can see where the price actually finished was probably 128.20 or 128.21 or 128.19. Completes that candle, and you're waiting for a bullish sign now, either a bullish engulfing or a hammer candle. And what is it that you actually get on the diamonds as you on the 30-minute chart? As you get down there, you get your bullish engulfing. So here is the bullish engulfing. Now, what we did not get in the following candle here was a confirmation with the price moving higher. So, in that case there, I would not have taken the trade. But because I'm looking for confirmation, and you just simply did not get it during that time period. You even got a bullish engulfing. I don't know if this would actually from this chart I can't tell, but it looks like this might have been a bullish engulfing. You didn't get confirmation on that candle as well. What we can see that is unfolding, though, is we do have the A to B equals CD pattern. Just for the heck of it, let's just switch over to the chart. We'll just pull up that 30-minute chart here. Let me see if I have that. I don't right there, but let's pull it up and see where that chart is at since I posted that. Here is that chart that we were just looking at. This is the actual live chart, and this would suggest that the D point on the diamonds would be at 131.52. And so at this stage, I don't see, as we covered in the early session here, things are looking bullish versus bearish, although the market is continuing to move up and down, and we can trade this intraday, and especially identifying the P-index date that is also going to be coming in next week. I think that what we're in is until we see institutional volume come into the marketplace and a follow-through day, it looks like we're in for a choppy set of trading. But I wanted to show you, even intraday on a diamonds chart, even on a 30-minute chart, you can play these markets. If I know most of you aren't looking for that type of day trade, but I wanted to show you how this works on really anything. And I just pulled out the diamonds because I did something for someone yesterday, and he wanted to look at the diamonds, and boom, we pulled it out, and there they were. So that's on the AB equals CD, and I want you to become an expert of buying and selling that D point. If you do that, you will be extremely successful in your trading. Works the same way on the longer term charts as well. That's what we're looking for. Here's the ES Mini. I don't want to go over that. We've already covered that, and we'll come back to it as time permitting. I've sort of covered this. I'm going to just go through this real quick. This is probably one of the most important slides here. It is what we are looking for. What we were looking for as we cover the diamonds. It's what I've been looking for on the ES Mini chart on the 30-minute in order to take a shorter-term position in the market. And that's just simply, no matter what pattern it is that you're trading, what I would suggest to you, if you're on in this case here, this suggests a 15-minute chart. You wait one 15-minute bar to make sure that price is moving in your direction. And if price is not moving in your direction, don't take the trade. And that will save you more money than not. If you're on a daily chart and you're going to take a trade, wait for one daily bar to finish. Make sure that price is moving in your direction. It is a entry technique that is not taught by very many, but I can promise you it's an entry technique that if you use for the rest of your life, you will be a happy, happy camper. And make sure that when you enter a trade, you've got all your work done. You understand your stops. That's both your exit points, your stop, and your exit point of where you're in the trade, what your expectation is, where you'd get out. That way you don't have to be in front of the computer. And over time, I'm trying to teach you how to utilize either sacred geometry, retracement numbers, ABCD patterns in order to identify your exit points when you enter a trade. While you're in the trade, you certainly want to manage it and make adjustments as more information is revealed to you. But at the time you enter the trade, you're going to use the information available to you, and I want you to have both a stop and an exit in place so that you don't have to manage it, because it's when you are most objective. And I do suggest, learning the bullish and bearish engulfings and the hammer and the shooting stars. Start there. You can add some other bullish and bearish candles to your trading arsenal. Let's move on to the 3-drive pattern. This was requested by one of the clients, for the newsletter, and that was the 3-drive pattern. And in the 3-drive pattern, what you're looking for is it should be pretty easily identifiable to you. You don't want to force the numbers, because if you force the numbers, it's probably not a real pattern. You're looking for something that is symmetrical, hopefully, and so it'll be visually stimulating. You're looking for patterns, expansions that we're looking at. We're using a 3-drive pattern. We're dealing with expansions, not contractions necessarily. To make the 3-drive pattern, we're looking at expansions. It's usually going to be, you'll see 1.272 and 1.618. Sometimes you'll see 1.414. It's also a kind of what I'll call a minor Fibonacci number. Oftentimes the time frames will be symmetrical, meaning very close to exact. From the first drive to the second drive, if it takes 5 candles, you're looking for it to take 5 candles to the third drive. Now, when those happen, oftentimes they're going to occur within a couple candles of each other, but when they do occur on time, that is a beautiful thing. When you are making the 3-drive pattern, what you would like to be able to see is you'd like to be able to see it also coming into a retracement, 0.618 or 786 retracement. I'll show you that here in just a moment. These patterns are very rare. If you are making a long-term top, when oil was up in the 140-ish range, it made a 3-drive to a top pattern. And oil went from 140 down to $40 almost nonstop. And that was at a time when people were talking about $200, $300, $400 a barrel oil. So just trade the patterns. Don't pay attention to what it is that they need in order to be able to sell airtime and commercial time. And these are really great reversal points. So let's take a look at a 3-drive pattern here. I'm going to use the first one that I'm going to pop up is on a 10-minute chart. And so what I'm, although this is more foreign to you than it is to me, this is one of the tools that's available in the charting software that I use that automatically plots expansions and contractions of swing points. When we are taking a look at, it happens to be one of those great textbook examples of a 3-drive pattern. And in this case here on the 10-minute chart, what you're looking at is a 1.272 expansion between swing points. So from this low to this low, that is a 1.272. That means you would measure from this low to this high. That dollar amount, multiply it times 1.272, subtract it from this high, and it would have given you this price projection right here. You can see you had two 1.272 expansions back to back. Interestingly enough, the first one happened to be a 0.618 retracement off of a swing point. This was a significant swing point right here. You can see this bar moving down into it. And the second one here was a point, or the third drive. This would be drive 1, drive 2, drive 3. And coming into 0.786. This one was a beauty. I do recall sending out just simply a text alert as this was being made, because it was also being made on the opposite, on the U.S. dollar index. And in this case here, so this is what we're looking for. Here where you have 3 drives, it's symmetrical. Let me show you further what it actually looks like. Here is just a blown up version. Here I'm showing you, this is nothing more than a tool that I have to show you from drive 1 to drive 2. Drive 3 would have actually been right here, which would have been 2 bars. A little bit later, you'd have to use some subjectivity. This had all of the math coming into it, all of the sacred geometry coming into it, so you would go ahead and cut it a break for being 2 bars. To me, this would not be trying to make a pattern out of nothing. This would truly be a pattern that happened when you take a look at what you're looking for here are expansions, and you're taking a look at this, at also these retracements coming in at 2 beautiful areas. If we take a look at it a little bit further on the larger scale again, here's what it would look like without having all of the measurements of expansions and swing points. This was actually setting up a Gartley buy pattern. So you were setting up a Gartley buy pattern where you had an A to B equals C to D, and you had 3 drives to the bottom coming into the 0.786 retracement. If you see a pattern like this set up, then you want to take that trade. These are hard patterns these patterns are very hard to form, and when they form like this, you want to take that. I'll go ahead and this was a pattern that came out of the Master Trader program that we did in Denver. The symbol on this is KOG. It's an energy company. And so here is the clean chart that I show you. And so if I show you this clean chart, hopefully the pattern is visually seeable. I don't know if seeable is the right word, but certainly visually stimulating, that you visually are able to take a look at this clean chart here and see you've got, in essence, drive 1, drive 2, drive 3, and you can see that it looks like mathematically that they're on a similar angle. That, in essence, is really what it is that you're looking for. Oftentimes they're not as clean as this, but this one certainly was clean. If we take a look at this pattern here and we go ahead and just take a look at what else it was doing as it was making those drives to the bottom, here, as you recall, I was talking about a type 1 hammer candle. This right here is a hammer candle. This came in, you had a confirmation, and look at how price moved up. You did not have any type of hammer candle coming into this second drive, but you most certainly did here. This is a type 3 hammer candle having this nice long wick. It was a really strong. This was telling you that even though we had this move down here, the bulls said no more with regard to lower price. They absolutely came in during the trading session and moved price up. That was a very strong hammer candle. If we take a look at expansions between swing points, if we just simply take a look at our first set of swing points from this low here of this hammer candle up to the high of the next high that came into the marketplace, so the next swing point that was up there, what you will see is the 1.272 expansion of that comes right out here at 432. Looks like this probably got to maybe 433, maybe $4.34. What you will also see is this swing, the expansion of this swing point to this swing point, the 1.618 came out to 358. This actually got to 359. So when you see the first drive to the second drive, ahead of time, if you were trading this, you would be able to, if you have a retracement tool that shows expansions and contractions, and you're looking for the possibility of a 3 drive to a bottom or a 3 drive to a top pattern, you would be able to, in essence, draw this ahead of time. You would be able to know what numbers you're looking for, on your next drive, and you would just simply have to be monitoring that to see if symmetrically that would work. Well, symmetrically, when you take a look at it, you can see that symmetrically this certainly worked. What you'll also see is from here to here was the 1.272, and from here to here, that's this number that's hiding a little bit here. A little bit hard to see was the 1.618, but certainly when we took a look at this over here, this let us know that 358 was going to be a 1.618 expansion of this swing point to this swing point. And some of you may be asking, well, what happened, Steve, after that 3 drive to a bottom pattern occurred? Well, first, before we go see what happened, what you'll notice is this 3 drive to a pattern was coming down to a 0.786 retracement of a larger move. So if you take a look at the swing point from down here all the way up to the high, what you will see is that was coming down into the 0.786 area. And so that is a beautiful thing. And to answer your question, what did happen, let me see if I can go there and find out. Here is what happened, and you can see that these turn into significant reversals. Of course, if you were in this trade, you would want to know what happened on the left-hand side, and what happened on the left-hand side was you had an A point that was down here at $2.43, went up, made the B point. Again, this was making a 3 drive to a bottom coming to this 0.786. That also became our C point. A to B equals C to D. Price moving up alongside the inside axis, telling you that that was a very strong move. And not only that, that you were going to likely be one of those 40%ers. You were going to do more than a 1-to-1 A to B equals C to D. This is a current chart. This was snapped, an hour and a half ago or so. And you can see that it did make it up to that $10.30 range, that 1 to 1.272 A to B equals C to D. If we take a look at some other patterns that are unfolding, this was included in the newsletter a couple of weeks ago. We were taking a look at the OEX, that is the S&P 100, that is the large cap within the S&P. Stocks like IBM are inside here. This was making a beautiful 3 drive to a top pattern. I was actually looking for this week to be the culmination. That would have been showing you from this move to this move. That's what this that's with this time frame from April 16th to May 6th, and I was looking for May 6th to this week here, April 27th. This thing here crested a couple weeks earlier. That was on this candle. We were looking for this to be a bearish engulfing. It ended up not being a bearish engulfing, but it did move down lower, but it didn't meet my strict criteria for us taking a short position in this. Who knows, by the end of this week, this might move all the way back up to the 644 area and complete a totally symmetrical both time frame as well as pattern-wise, price-wise, 3 drive to a top pattern, which you'll look over here in the upper left-hand side. This also happens to be the 0.786 retracement from the move down, 645.24. So the week is not over, but I can promise you we'll be paying attention to that. And this here is the Dow Jones Utilities. This is a current chart here. What you will see, and this is one where I say you're trying to really force the 3 drive to a top pattern. Again, here is drive 1, drive 2, drive 3 would have happened in here. You can see it was really all the way out here. This worked, but I think this worked more not because it was a 3 drive to a pattern, but you can see it's moving back up into those highs today. If we try to identify another 3 drive to a top pattern, one that did not unfold, this was one I was looking at. This is the current gold contract, and this is where the pattern was being drawn in advance. I was looking for gold to move down into the 1586 area. That would have been a 0.786 retracement off of this low to this high, and this would have come in here several trading sessions ago. That did not, but you can draw these patterns in advance. This pattern was being drawn right around here, in the last week, and this just simply, didn't. Or a couple weeks ago, several weeks ago, and this is a pattern here that just simply didn't work out. So you don't want to force those patterns. Now, the question is, though, did the 3 drive pattern work? So I was looking for one that looked a little bit more like this because I was trying to come into the 0.786 area. If we take a look at the shorter one that actually is out here, you've got a 1.618 expansion from here to here. And on this last leg was 1.272, and the market did move up a bit. But to me, the pattern didn't unfold. It was really just trying to force it. The more symmetrical one would have worked coming down into the 0.786 area. I can see, boy, I'm going to do this because and I've got more here to cover than we have time, and so there's like about 5 minutes left. So I want to go ahead and open up the floor if I can. So if you do have a question, why don't you go ahead and type in a question, and I'll be happy to get to you, and we'll go from there. So Steve came in late. Short term, are we bullish or bearish? Not enough information. I'll switch back over to the chart here, and I'll switch back over. We're making our decision right now based on the ES Mini. You can see the ES Mini is trading above 1386, folks. You can also see there has been the only bearish candle that really came in for us to consider changing as we are looking for a change in trend as we came into this 0.618 was this candle right here. It was a bearish engulfing candle, but the following session we got to close higher, and therefore no trade. Possible 3 drive on ES 10-minute chart. Well, Glenn, let's take a look. I got this up here, and I need to. I wish I had a microphone that is open, so I'm going to assume you're looking perhaps from this candle to this candle first. So let's take a look and see what type of expansion we had there. So it was a little bit over 1.618, and just say yes up to 1390. And let's also take a look at the time frame up here, see if I can put and tell me if I'm choosing the candles that you were looking at here. That really would have ended about right now. Would have ended today, and a couple trading sessions ago. If I pull this down just simply to try to draw the pattern, let me go ahead and erase this here. Drive 1, drive 2. You would have had to have really finished right up in about this area here, and that would have potentially given you your 3 drive to a top at the 1390. So, Glenn, that was good work in trying to, looks like we came up with the same price. You had 1390.75. I got 1390.73. Was that close enough? But what you can see is price did not move up into that area. If we got a big push up there coming into the close right now, then we would. I'd have to say that is close enough for my work, and we would take a look at going ahead and taking a trade. But so good that was a great job that you did, because you knew that ahead of time, and that's really how I want you to be able to use these patterns. You draw them ahead of time. Don't force them. Let them play out. If they do play out, go ahead and trade it. Now, when you would get up there, folks, on that 3 drive, what you're looking for is a candle confirmation. So even though you just get up there, what I want you to do is I want you to wait for a candle confirmation. I'd like that to be a bearish engulfing, or I'd like that to be a shooting star, and or if you just simply choose to trade the 3 drive pattern without those, make sure that your next candle is a move lower as you make that top. How about another question out there while we have a minute or so to go? Anything else? If we take a look, I'm going to peek around at the markets to see what it is that we've got here. You know what you can see here. This is the SPYs. The SPYs. If I take a look at, let me take a look at probably the most important thing out here today. That and if you missed the beginning of the session, we'll have this archived. I'll try to get this up tonight, although I'm a little short-staffed here today. But I'll try to get this up tonight. You want to listen to it. This here, and this is an island reversal with the gap up today. So you can see we had this gap down. This is the Qs. What used to be, what has been weak and has been leading the market down, all of a sudden we have an island reversal candle formation that has occurred. I don't care if it's driven by Apple or what it's driven by. You have to respect island reversal candle formations. If you look here, here's the last time you also had one inside the Qs right here. And so, this is broken outside of this downtrend channel here right now. Volume today, nothing huge, 51 million. You are up into this downdraft here, but you need to respect that island reversal that is out there. That's on the Qs. If you go to what has been the weak link out here, which has been the small caps, the small caps aren't, I don't see a failure right now. Really anywhere. I'll have to study it more, but just a quick look at it. So, folks, it's 4 o'clock. I'm sorry that we've run out of time. I had more, and we'll just simply have to get to it in a couple weeks. And if you do have any questions, please send me an email. As always, you can reach me by phone at the office, 877-518-9190. And have a wonderful Wednesday afternoon. Thanks. Bye-bye now.